If you're still struggling to find a simple and effective ICT strategy, then this model right here is about to change your life. In this video, I will walk you through it step by step and explain how this mechanical rule-based system taught by ICT is an absolute game changer, and you will start seeing results in your trading from today. All you need to do is watch this to the end of the video, and also do note the fact that 95% of traders actually fail in their trading because they don't bring to the charts a simple and effective and repeatable process that they can apply day in and day out. Instead, they'll start strategy hopping, and that's the worst thing you can do as a trader. Take this advice from myself, a 7-figure funded day trader who's been trading for the last 3.5 years and has over 6 figures in payouts from prop firms. You need to have a simple, repeatable process that you can stick to that suits your trading personality, so you don't go strategy hopping and you don't start changing your edge over a series of trades. You want to find where your edge is, you want to find what your trading personality is, and actually trade in that style, in that manner. So let's go ahead and let's get straight into the details. So as you can see right here, we have the pairs, the time frame, and the instructions of how to actually go about this very simple model, right? It's one of the most effective ICT strategies out there, simple rule-based mechanical system. So watch this video to the end and follow along with these steps. So first of all, the pairs that this works best on, the usual GBP USD, Euro GBP is a good one, and I've actually noticed that it works very nicely on indices as well, right? We're going to be using the 4-hour and the 15-minute only in this scenario here, but as you guys know, price is fractal, so this can work on other time frames like the 1-hour and the 5-minute, for example, okay? But in this video, we're going to go through the 4-hour and the 15-minute time frame specifically, because I feel like once you can actually grasp these two time frames, it becomes a very nice simple process that you can apply day in and day out, instead of having to chase the market and see these type of systems form on this type of market structure and pattern to form around 10 times in a day, right? You don't want that. You want your mind to be calm, and you want to see this type of opportunity once every day or once every 2 days, right? Then simply we have the instructions right here. So the first thing we want to do is identify the order flow, identify the trend, identify the daily bias of the market. We're simply going to locate FVG1, which is going to be the FVG which is aligned with our bias. So if we're going bullish in this example, as you can see, we're going to identify a simple 4-hour FVG. Then we're going to simply locate the second FVG, which is going to be another one on approach to this area, and that's just going to be our target. Very simple. We're actually not going to wait for a sweep. Let me get rid of that for a second. We're just going to look for a simple market structure shift entry on the lower time frame, which is going to now be the 15-minute time frame at this first area here, and we're simply just going to target this second FVG right here. What I've noticed is price likes to go through FVGs a lot of the time, so what you can actually find yourself in is a higher risk to reward format than the usual targeting certain order blocks, targeting certain highs like the Asia session highs, right, and other liquidity points. Once I see the market find an FVG here and locate it, we can actually go ahead and target that, and that can give you a decent high risk to reward and also a very good win rate, especially if you're working with these two time frames. The lower the time frames you go, the more noise potentially that you're going to create for yourself, and more confused areas and multiple FVGs. What I like to see is a nice FVG in a more discounted range, which is why I like to go for my entries. And then in this region over here where the market is currently, you will see something like this. Of course, you'll see the market potentially trending to the downside. We then find that break of structure on the 15-minute time frame, and then we can go ahead and look for a retracement into things like an order block, an FVG, even an inverse order block, an inverse FVG, sorry, and even a breaker block, right? And all we're going to do from there is enter, put our stop loss below this low right here, and then simply target this FVG right here. That's pretty much the system right there. Let's go ahead and let's get straight into the first example. If you want me to pass your prop firm challenge, or you want to get funded with a 100% guarantee, then this automated trading bot fast passing service is for you. Most people spend around $7,000 over 3 months before they reach their first ever funded account. But with this bot, you can actually avoid the waste of time, the money, and the stress by letting it pass the challenge for you with a 100% guarantee. If we fail the challenge, you'll actually get a full refund. So get onto this while it's still available. The demand is extremely high and the group is growing at an extremely fast rate. Click the link in the description to get funded and change your life today, and do not waste time. With that being said, let's get straight back to the video. So with our first example, we're on SPX 500, we're on the 4-hour time frame, and I've identified that the market structure and the overall daily bias is bullish. So with that in mind, I'm going to specifically be looking for bullish fair value gaps. Now with that being said, let's go ahead and identify the first FVG. So the first thing I'll do is find this first FVG right here. Okay, let's make that a bit more accurate. And then the second one, of course, on approach to this region here. Now, of course, we can see some imbalance here. Let's just see where the next candle wick high retraces to. So you can see there's still a bit of FVG. We can go ahead and target for the extra buy side once we actually activate our buys. So now that the market's coming to this region here, and again I did say I want the market to retrace into a region where I can see a little bit of a retracement, and as you can see 61% is already 50% or roughly around this FVG. So now that the market's done this on the 4 hour, I will wait for a tap into there on the 4 hour time frame and a nice 15-minute market structure shift, which I'm about to go through with you. So you can see here the market tapped into our FVG very nicely, and as you can see, if we just go ahead and trail the market structure itself, you can see lower lows and lower highs forming, right? Lower high, lower low, and then all of a sudden we do get this higher low right here, and then we get a higher high. This is also known as a 3-leg extension, but to simplify it, it's also known as a market structure shift on the 15-minute time frame. So all I'll be waiting for right now is a simple retracement into a PD array like this order block right here. Very, very simple. And of course, if we go ahead and use that Fibonacci, you can see that the market has broken structure to the upside, and this area, this whole order block, aligns very nicely with our discounted regions. So what I would go and do over here is potentially just target potentially 0.5% on this first entry of the order block, put my stop loss below here. And if I do feel like this is it, because it does look like a very nice setup right now with a nice 1 to 2 risk reward, what I may also do is enter a scale-in entry potentially on the halfway in drawdown potential area to really double up on that risk to reward and give myself a higher risk to reward for the value I'm getting. Now you could potentially risk 0.5% here, 0.5% here, and overall that isn't actually 1% risk right there. Right there you're risking 0.75 instead, right? So this is a nice way of going about managing your risk when it comes to you taking entries. So this could potentially be one type of entry right here. We'll ignore this for now, and I will show you that what it looks like if we do get activated. So with that being said, let's see if the market comes in. So we have a nice tap in that would actually be us activated, or just maybe not about even. Let's just see if this comes back into a little bit more deeper so we can get an entry. So it's breaking highs. Oh, okay, great. So now that we've got an entry right here, and actually a very, very nice rejection candlestick on the 15. Remember, if we had that extra entry in here around the 70% region, we would be in some very, very nice profit already, okay? At this moment in time, you could already be up a 1 to 2 risk to reward, whilst this position is already up a 1 to 1. This is the benefit of aggressive trading, but again, it does come with a bit of with a few downsides as well. But as you can see here, very nicely so far, so good. Up potentially around a 1 to 3 altogether. Let's see if this can continue in our favor. So let's press the play button. And we can see the market coming straight into our FVG right there, hitting the take profit for a 1 to 4 right here and a 1 to 2.37 right here. Okay, great risk to reward right there, over a 1 to 6R just gained on this one position right here. Okay, very, very nice. And you guys can see the simple system working out there, and you guys can see once the market breaks these lows, that's where I would look to potentially manage my risk even further and potentially close out the position. But as we continue to create bullish market structure, this aligns with our 4-hour bullish bias and our daily bias, hence why I would still be very happy to target these liquidity highs right here, and potentially even this liquidity high as well, which the market just even tapped. So that could potentially be a very simple 1 to 3 on this position right here, and a 1 to 6 or 1 to 9 risk to reward accumulated through one simple identification of one FVG in the direction of the daily bias, and then an FVG on the approach to this first one also being your targets. So let's move on to the second example. So moving on to our second example, we're on NAS 100, we're on the 4-hour time frame, and this is almost identical to almost the last one, but you guys can see it's a completely different pair. And again, I just want to show you how easy, how effective, and how simple this strategy is, and how much it repeats during the day, right? You guys can literally go ahead and backtest any of this anywhere, and you will see amazing results, right? So again, we're going to see a FVG number 1 right here, and we want to see our second FVG being the one that approaches the first FVG once created. So this would be this region right over here. Okay, now that we've identified that, we want to see a nice tap into this FVG a little bit deeper than where it currently is, so we can actually find a nice market structure shift on the 50-minute time frame to go in the opposite direction. So we can see the market, the candle goes through it, and that's perfectly fine. FVGs usually, they do go through these areas right here, and now we want to go down to the 15-minute time frame and look for a market structure shift. And automatically what I am looking at is very simply these market structure highs right here. If I can see that taken out, then I will be looking for a retracement potentially into this order block right here for the market to come into. So we're already creating structure right here, which is kind of a good sign. If we can now see, in fact, this high get taken out, that will be another market structure shift in my opinion right there. So Let's see what the market does here. Still creating structure. I would not class that as a break. I want to see bodies breaking above this area for me to go for a potential buy on this position. So that's very much now a break of this market structure. So with that being said, right now I will now be looking for areas to go off a potential buy from. So if we go ahead and highlight, for example, this order block right here, I will look for a retracement into this region, or potentially in fact into this one right here. Even though it has already been tested and this one has already been mitigated off this one, I want to see the market come back into this region over here and mitigate and continue back to the upside. So let's see how this goes. The market did come into this area here, and if I was to enter off this area, I simply enter here and, like the previous example, put my stop loss below this low and then simply target that initial FEG, which was around this area here again, for a 1 to 2.78 risk to reward ratio. So let's see how this trade plays out. For those of you who are serious about becoming full-time day traders and actually changing your life, the Ad Trading Academy is currently open for enrollment and prices will be increasing very shortly. You can see here that this is a one-time payment that will give you lifetime access to my full course, an A to Z course, whether you're a beginner, if you're an intermediate, or if you're advanced. This is the perfect place to be to level up your trading and gain that consistency in your edge. You can see here you'll get access to all my webinars, my pre-recorded webinars. This also includes live trades, which I've broken down here in the actual curriculum. The Discord community full of like-minded individuals, a great community of members to have around you, my own shared trade ideas, and 24/7 full support. The links for this will be in the description down below. You can see the Academy curriculum right here of everything that we're going to be breaking down, including my old current breakdowns, as well as that the price and the lessons as well. Remember, the pricing will be increasing very shortly because I want to focus all my attention on the current batch of students. And again, guys, it's currently open for a limited time. The Discord community here shows you guys exactly, as you can see, the results from our members, consistent withdrawals from our community, from our members, from our students. Again, you won't find this anywhere else. It's all about learning, applying, getting paid, and getting funded, right? People are getting there, passing the challenges, getting funded and getting paid, and that's the aim, and their consistent results are speaking for themselves, right? So go ahead, guys, take advantage of the opportunity, be a part of my inner circle and level up your trading for the better and become a full-time day trader with the help of the Ad Trading Academy. And again, if it comes back into drawdown again, I would look to enter into the position to really scale in because of the high win rate of this strategy right here. So let's see how this goes. And again, yeah, we did come back into that drawdown and we hit our take profit very nicely. So this could potentially be an extra scaling at this 50% region of the order block. And of course, this must have been some sort of a news candle the way it came out, but it was a very, very simple system and a very simple entry, literally almost identical to the previous SPX example, right? And remember, we want to put our stop loss below this initial low, and that's what saved us with this trade right here. So with that being said, right now, we have, again, a very nice risk to reward with this scaling technique, and the market actually continuing much beyond these liquidity highs as well, which you can again target once we surpass these FEGs, because like we said before, the market usually likes to go through these FEGs. So what do we get on this example right here? As you can see, we have a nice initial entry going for a 1 to 3.3 risk to reward, and the second one going for a 1 to 4.4 risk to reward. So altogether around a 1 to 7 risk to reward, and that again is all because we identified the daily bias. We simply found the first PD array being the FEG. We found another one there where we could go ahead and target, and all we did was wait for the market to come into this area. Once it tapped, rejected, find market structure within this region over here, and as you can see, the first point of interest was this high to get taken out, but once the market stopped here, made a higher low, that then makes this area here become the next point of structure, where we've gone ahead and targeted our structure point off, and all we're going for here at this point is a Fibonacci long from this low to this high, or to this next high, in fact, right here, which was actually broken it, this wick to wick, and we want to see a retracement into ideally this order block right here, since it's sitting at a discounted region. And once we enter here, we put our stop loss below this 100% retracement zone, and as you can see, we may, have just survived this trade by a few pips, and that's the benefit of putting your stop loss in the correct positions instead of being cheap with it to try and squeeze out a little bit more risk to reward. But as you guys can see there, very simple, very effective system. You want to have a simple and repeatable process that you bring to the charts every single day. So that's it from me, guys. I hope you found this video helpful. If you do, please leave a like, comment, and subscribe, and I'll see you in the next one. Peace.